On this episode of the RE Solution, Randy from Radian stops by to talk low down payment options for homebuyers. So thanks so much for joining us on another edition of the RE Solution. My name is Chad Riedlinger with Resolution Home Loans, and today I'm joined by Randi from Radian Mortgage Insurance.
Good morning, Chad. Thank you so much for having me here today. Really appreciate it. My name is Randi Gazinski. I'm the Senior Account Manager with Radian Guarantee, and we appreciate the partnership with Resolution Home Loans, and happy to be here.
So the other day, Radian stops by. Randy comes by our office all the time just to drop off some goodies and chat with us. And the goodies always turn into awesome conversations. And so we started talking about some different scenarios that Radian offers us with home buyers. And I thought it would be a great idea to invite Randy in and be able to share some of those high-level type of things with you guys, so that you understand from a 30,000-foot view how mortgage insurance can affect your buyers that you work with each and every day. To kind of get started here, so Radian offers 4 different kinds of mortgage insurance options for buyers, and most realtors and buyers have no idea that these are even available. So you guys offer borrower paid monthly,
Correct.
Borrower paid lump sum upfront, lender paid, and then something called split edge, which I don't think most people even know about, but there's some huge benefits. So can you explain briefly each option and how maybe it'll benefit a home buyer?
Sure, Chad. I'd love to do that. So the borrower paid monthly is where they just pay it with their mortgage payment. It's paid each month, and there's no escrows or anything up front. So it's really easy. All investors accept it. So that's really
like the traditional, like what everybody kind of knows.
Most widely
mortgage
used.
Insurance.
Absolutely.
Okay.
The borrower paid single is where they pay it one time up front, and that option is really good, especially if maybe their debt to income ratio is a little bit tight, and maybe that helps them get an AUS approval, or maybe you have some seller concessions that can help pay that upfront fee.
And that's where we've used it a lot to make deals work, where deals will come in from other lenders and they say their ratios are too high,
right.
And then we'll kind of work with the mortgage insurance options and say, hey, instead of putting down 10%, you can put down 5%, pay your MI up front, and then you have no monthly MI. Now the ratio is lower. So there's different options that we can play with that a lot of lenders don't think to do. So sorry to interrupt, but go
No,
ahead.
that's great.
Right.
And actually, that is the way to utilize that program. I mean, and our rates are absolutely the best in the universe. That's what we say. And we're very happy for that. I mean, it really does help. It's the cheapest payment for the borrower all day long. And I think at the end of the day, most borrowers are more payment conscious than they are rate conscious.
Right.
So I think it really does help. And then the third option is the lender paid, and that's if the borrower doesn't want to pay mortgage insurance for some reason. You can include it in the interest rate, and the lender would pay that premium for them. And then the last option is what we call split edge, and that's more of a true comparison to an FHA, because we have 6 different upfront options. You can pay anywhere from a half, 3/4, 1 point, 1 1/4, 1 1/2, and 1 3/4.
So yeah, a lot of options there.
Right, and the more you pay up front, it reduces the monthly factor. So that also will help your borrowers make sure that they qualify for their loan.
And that, Randy said, that's actually a really good comparison to FHA, because FHA does charge the upfront mortgage insurance premium and the monthly mortgage insurance premium. So a lot of times people will say, well, the monthly mortgage insurance premium is cheaper on FHA. Well, yeah, but they're paying a huge amount up front. So that's where split edge allows, on a conventional loan, for that to be competitive with FHA, and in a lot of cases even better, because it won't be on there forever. Like FHA has the monthly mortgage insurance, it never goes away, whereas with conventional, there's options where eventually you can get rid of it.
That's correct. And so that's a really good point. So the FHA, the monthly factor, is there for the life of the loan. It doesn't go away unless your borrower refinances.
Right.
But for the conventional mortgage insurance, there's 2 ways to cancel your monthly MI. And one is through the Homeowners Protection Act. And the Homeowners Protection Act states, once the unpaid balance naturally amortizes to 78% or less of the original sales price or appraised value, it's canceled automatically by the servicer.
Right.
That is also available.
Which can take a while, though. I mean, when you look at a regular, if you're looking at a 30-year amortization, that could be a while. So
yeah, on a high LTV, you're probably looking 5 to 7 years.
Gotcha. Okay.
But also you can use the single premium if you paid it one time up front. There's a pro rata basis for the refund, and that is available also on the Homeowners Protection Act. So that will also cancel as well.
So speaking of FHA versus conventional, there's two really cool programs that are available right now, which tie directly into what you guys offer. And that's through Fannie Mae, we have Home Ready. And through Freddie Mac, we have Home Possible.
Correct.
So explain to...
But basically, what's great about the programs, they are 3% down. You do not have to be a first-time home buyer. As long as the borrower has a 680 FICO score or greater, there are no loan level price adjustments, which means that their interest rate would be better for them. And it also allows for reduced MI coverage on those programs.
And that's a significant payment savings because... like for you to say like the loan level pricing adjustments, but for the viewer, like those loan level pricing adjustments could be 2-3 extra points that like when you're having a high loan to value type of scenario where they cap it at what, like 1.5%?
Correct.
So if you're dealing with a 1.5% hit to the pricing versus like a 3% hit to the pricing, that's a 1.5 point difference, which significantly decreases the interest rate on the loan, which in turn decreases the payment. And then on top of it, like the cherry on top, you get the reduced mortgage insurance.
Absolutely.
So that's a really good point regarding Home Ready versus Home Possible, is that it really helps focus on getting the buyer to the payment that they want on the property.
Yeah, and then just another point to make: those programs do have income restrictions, but you still have a 97 program that's available to the borrowers that don't offer that reduced loan level price adjustment or reduced MI, but is still available to the consumer. And
we check that on every deal that we do. So every time we're doing a conventional with a higher loan to value, we're always going on the Home Ready and Home Possible websites to check the address, just to see, because there's been cases where we've found properties with no income restrictions, and we're in areas that you wouldn't think would have no income restrictions, like areas that are more affluent, but just however the map works, it falls into that area, and then we've been able to offer a client Home Ready or Home Possible where we didn't think we could. It also helps us win deals because our competition isn't always checking on this stuff, and they're doing a 97% loan, and then we're coming in doing a Home Ready, Home Possible, and giving a significantly lower interest rate, which is awesome. So I love working with the different options, and it really gives us the ability as a lender to be an advisor to the client versus just an order taker. So I find that a lot of clients come in, and with other lenders, they'll say, hey, I want a 30-year fixed FHA, and a lot of loan officers won't ask why.
Right.
Why do you want an FHA? Oh, well, it's the lowest down payment. Well, is it really? Because it's not, because with conventional, we could do 3% down in many cases.
Correct.
And so I think it's just really, it gives, with the products that you guys offer us, it gives us the ability to be advisors and really help an overall financial profile, help the client versus just being there and being an order taker. Because you actually made a really good point that I want to go back on. When you buy a car, for example, if I walked around this office right now and I asked all my employees, what interest rate do you have on your car loan? Like most of them would have no idea, unless they bought it and got 0% financing. Everybody's remembers zero, right? But if you just finance a car, you walk into the dealership and you say, I want a car payment, right? If you can get me that car I want for that monthly payment, you got a deal. And you'll walk out and you'll be happy with it. And what we found is that, like you said earlier, a lot of buyers are the same way. They don't really realize it, though. So what's your budget? Like, what would you want to spend? And if I can get you in the home you want for the payment you want, would you sign today on the contract? And that's where the options that you give us at Radian give us the ability to really massage that payment and work into the customer's payment, and sometimes be able to afford a house that they don't think they could afford, or even us get a DU approval or AUS approval on a house they couldn't afford because we're working with some exotic options on the MI front.
So that's a great point, Chad, because it's really important for the consumer to work with a reputable company that has experienced, licensed loan originators that really can find the best product that suits that borrower's needs. Every borrower is different.
Absolutely.
So it's really important that they're able to do that.
That's the kind of stuff you don't get with an 8-minute mortgage. So anyway, the other thing I wanted to bring up is that you have a really cool website that I was on the other day that is for home buyers, right? So can you explain maybe a little bit about it and give us the site where people can visit and put their buyers in that direction?
Yes, it's called Achieve the Dream. So if you go to the website, there's some really great tools for buyers. And it doesn't have to be for first-time home buyers. It talks about, the mortgage process and, all the things that you're asking them for, their W-2s and pay stubs and bank statements, all the required documentation to obtain a mortgage. But it also has an income, it has an analysis that you can show renting versus owning. A lot of people, especially with low money down, they don't buy. They sit on the fence because they're always so afraid how they're going to make their mortgage payment, when in essence their mortgage payment in most instances are cheaper than what they're paying for rent today.
Absolutely, and that's something that's, I think, unique to South Florida, because we went to New York this about a month ago, and we were looking at. I'm always looking at properties wherever we go, just because obviously I'm in the business, and I'm looking at rents in New York. And my cousin lives in Manhattan, and she's got a 1-bedroom there and pays, I think it was like $2,600 a month. And a unit came available in her building, and her super's like, "You should buy this unit." And she's like, "Great, how much is it?" He's like, $1.2 million. So in that situation, the rent is much cheaper than it would be to buy. But here in South Florida, absolutely, there's a lot of homes where you can own for the same, if not less, than it is. And I think that's an important point, is to get them over to the website, let them kind of, let your home buyers play with the numbers to see, because I think people just psych themselves out, and buying a home is so much more expensive. And look, you're paying a mortgage either way. You're paying your own mortgage or you're paying somebody else's mortgage, right? So it's kind of nice to pay your own mortgage and get all the other benefits of home ownership with appreciation and the interest deduction on your taxes and all that good stuff. So what's the website again?
It's www.achievethedream.com.
Awesome. So listen, I hope you guys enjoyed this today. I think Radian is awesome. They have ridiculously good rates, and Randy's always here to help us and run scenarios with us. So I just wanted to give you a little behind-the-scenes view on some of the stuff that we do here at Resolution Home Loans and some of the conversations we have with Randy regarding these scenarios. So thanks so much for joining us today. So listen, thanks so much for joining us on this week's episode, and I look forward to seeing you right here next week on the next episode of the RE Solution.